FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we're going to take a look at some of these setups that happened today on some of these pairs. And we're going to take a look at a couple different ones. We're going to break each of them down so you can understand how they happened. And we're going to talk about what kind of cycles these particular pairs could be in for this week. All right. So without further ado guys, let's go ahead and get this started. All right, so let's go ahead and start with pound USD. So pound USD, as you can see, this morning during London, we ended up getting a nice type 3 pattern on pound USD. Now, I know that some of you might have thought this was actually going to be a type 2 going up, but it was actually a type 3. So how do you determine whether it was going to be a type 2 or type 3 or what direction? So the first thing that I think you have to understand and look at is when you're looking at this is just look at the bigger picture, right? So zoom out real quick on a 15-minute time frame. You can go up to an hour time frame or even a 4-hour time frame, whatever time frame you like, right? But understand essentially what's been happening so far with pound USD. So far, as you can see, since September 1st, it's been pretty much in a downtrend. It's been in a downtrend ever since. So pretty much so far, 8 days in a row in a downtrend. You've had pullbacks, yep, and stuff like that, but the majority of it has pretty much been in a downtrend. All right, so as we go back to a 15-minute chart, if we're in a downtrend, you have basically all the EMAs above you, okay? So essentially that's telling you that you're in a downtrend on a higher time frame, meaning either on a 4-hour and on a 1-hour time frame, the 50 EMA is still above price. So you're still in a downtrend. So ideally, you should actually be looking for sells and not looking for buys as of yet. Okay? So that's number one. Number two is at the time where this was actually happening, so right around here, let's just say, you can see if we go look to the left, where is major structure at? All right, so the major structure essentially is here, is all through this area, right? The bottom of it essentially being like down here. Okay, so knowing that, we know that we have room essentially to get down here to this main structure that's over to the left. So you have a couple things that are basically telling you what direction or what bias you should have. Okay, you have to the left where the main kind of structure is, where price has been to before, right? Look at all this right here. This goes on for 1, 2, 3, for 4 weeks straight. This entire structure here. Do you see that? So we're kind of, you see, we're not at the top, obviously, which is up here. We're not anywhere near this structure here. We're still in the middle. So because we're still in the middle, obviously we want to get down to this structure, and I believe that's where we're going. That's where we're headed. So because of that, your bias should be a sell. And if you see where the 50 EMA here is, or even the 200, as this starts to basically play out, you can pretty much see that the 50 here is prohibiting price from going any higher. Okay, and so that candle right there, that would have been the determining candle, telling you, hey, we're breaking out of this structure here, and this is essentially going to be a type 3 setup. So what does that look like as far as a setup goes? So your target essentially, since you don't have the EMAs in your favor, you can do something as simple as a 2-to-1 risk to reward ratio. And in reality, you're looking towards getting to that bottom of that structure. But to be on the safe side, you want to make it something that's easy, like an easy target for price to get to. So easier would be up here somewhere where you see price gets rejected before. You can see up here as well. So somewhere right there would be a pretty good spot to take profit at, and literally that's where our 2-to-1 risk reward ratio is. Okay, so ideally the best scenario for an entry here is a pullback on the next candle, and you get a little bit of a pullback here on at the beginning of this next candle, which helps you maybe by a couple of pips or so. So once you enter the trade here on the small pullback here, essentially you could see what ends up happening. It goes extremely in your favor, by over 100 pips actually. So we only wanted a 2-to-1, which is about 47 pips or so. So not a bad trade there, and you went basically in one direction pretty much the entire day also. So even you could see throughout the US session you had a continuation trade. But that was essentially the trade setup on pound USD. Another thing to consider in mind is if you're, let's say, counting levels or whatnots, then obviously you have your peak, you have a level here, you're going to have a level here, and this potentially is, let's say, a third level here. By the time it gets down to this particular point here where it's at now, which is, as you can see at the bottom of this of the previous structure, now you're thinking to yourself, could this be basically like, let's say, a peak formation low? And if it is a peak formation low, then essentially we should possibly see sideways movement to create the peak formation low here Wednesday. And so if that's the case and you get, let's say, a reversal, so let's say this let's say this right here gives us a reversal on Wednesday, then you had a full day of drop here, and then you basically had a midweek reversal on Wednesday, making it a market maker cycle. Does that make sense? So if that's the case, then you already know what to expect, basically, and possibly some more buys for the rest of the week. But you have to see what happens on Wednesday. Are we basically going to go ahead and continue down, or are we not? We should be able to consolidate here because we've already gone down 3 levels, and we've already been through that structure that we just talked about that's over to the left. So you can see we already have peak 1, 2, 3, and then hopefully we can make a peak formation low here and start to go back up. We'll just have to see what happens, right? So we'll see what happens with this one, but at least you know what potentially I'm anticipating on this one. All right, but type 3 trade setup on pound USD. Pound JPY had pretty much an identical setup almost to this, where it was a type 3 setup also. You see price coming down, hits the bottom of the range, comes right back up on one candle. You end up getting a star pattern here, and then it just takes off. These two, pound USD, pound CAD, or I'm sorry, pound USD, pound JPY, I mean, you can see they're, pretty much identical as to what they're doing. So keep that in mind when you're looking at pound USD, pound JPY right now at this particular moment. They look pretty identical. So kind of, you could expect very similar patterns to happen on both of these pairs. Okay, so same thing, pound USD, pound JPY, type 3 setups. Pound NZD had also a type 3 setup. This one actually looked way more like a type 2, type 1 pattern because of what it was doing down here. You could see where you had essentially, potentially a one leg here, came up for a second leg, and then went back up. The problem that you have, obviously, is that you ran into like a brick wall when you got to the middle of the range, and you got a essentially a railroad track, right? So if this ever happens to you and you end up taking this as a type 2 because everything is there, first, second leg, crossover, and all that stuff is there, and you notice that it literally runs into a dead wall, it hits either the middle of the range, the 50 EMA, and it gives you a railroad track right next to it. Okay, so here's a railroad track right here. If you see that behavior, then you should know to break even on that trade and get out of that trade, because that's not what it's doing. Type 2, type 1, that's not what it's doing. Okay, you should actually take that as a type 3 setup. And it's the same thing when you look at the structure here of this. Look at this. It's been going down for quite a while now. If you look at this on a 4-hour time frame, you can see it's been going down for some time now, since August 20th. You had your peak here. There's a 1 level. There's 2 levels here. So you potentially got 1 more level to go down to. And you can see where the structure is over here. So you still have what I would think is some ways to go on pound NZD. But you ended up getting a type 3 setup on pound NZD during London. And you actually end up getting a reversal as well. As you can see, first leg here, second leg right on the inside of the US session, crossover happens, and you went up another 90 pips or so. So about, from this particular trade here, you're looking at a 2-to-1 during London, and then a reversal during the New York session, and that's a 1.5 to 1 risk to reward ratio. So 56 pips or so, and say about another 70 from the London session. So not a bad day to trade pound NZD. Let's take a look at gold. So gold had a nice type 2 pattern right at the beginning of London and a reversal in New York. So huge moves on gold. So here is essentially the trade set up on gold. You can see well over a 2-to-1 risk to reward ratio on a type 2 setup. First leg here, second leg is right here pinning to the 200, and I mean it just dropped massively. You could see the return trip for the reversal. This one was definitely a lot bigger, more of a risk factor because of how big these candles are. I mean, you're way too, you're over 100 pips here that you'd have been risking. So I don't think this is a very viable trade in the long run, though, because the risk would have been way too high. But the right setup to take on this one would have been a type 2 setup during the London session. And then USDCAD, finally, we had a nice type 3 setup also during the London session on USDCAD. As you can see, price came from the very bottom, went to the top, came back down to the middle of the range, pinned the middle of the range, also along with the 50 and the 800 at the same time. Boom. And that was your trade. So, I mean, as you can see, this one went up the entire day, almost no retracement. You're looking at in there 6-to-1 risk to reward ratio, huge move on USDCAD. Now, the question on USDCAD is on the bigger picture. Let's go to the daily. Is you can see that we're basically at on a second level that's been worked on for almost a year and a half, close to 2 years now. The question is this going to be, the break basically that works its way all the way down, basically like this one did here, to go to another level, right? So is this one the one that's going to basically make that move here like that? That's the question. So I'm still more of a seller on this than I am a buyer, because of the trend here that's been going on. So, and because it's been pretty much all broken now. So the question becomes, how much is this going to need to trend back, retrace basically back up again before we have another drop, is the question. Okay, so until this changes behaviors to where it's actually going way higher, let's say, and breaks through, let's say, the 200 or something like that, then I'm still going to be a seller and look for sells, not for buys. But on this one today, you just had literally the best setup on this, which was a type 3. You can see as far as the weekly cycle goes, where looks like we're going to be basically in a trending cycle. The only thing that would change that obviously is if we get a reversal coming tomorrow here on Wednesday. Other than that, it should be a trending cycle going back up. So we had 1, 2, 3, 4, 5 trades today that were available on different pairs. All right, so I hope that you found this video useful, and hope you enjoy the content, guys. Thank you so much, and enjoy the rest of your day.